Hi, my name is Deon Rebello, and this is a Bullion Vault. Hi, Willem, how you doing?
Well in yourself, Dion.
Good. Episode 45. So we've been podcasting these now since January this year, and we've got through 45 of them. I mean, that's quite a thing. I think we'll definitely have some celebration when we get to the big 50, but it's impressive. And again, thank you for your time and your input into this.
Only a pleasure.
So we are heading towards the end of the year, and if we look at it, October was quiet. There's a lot of lateral movement, especially with gold. Silver was continuously moving upward. November was a really big month for it, and then December again. I mean, so this final quarter, and again for platinum. But of course, today is the second installment of our projections for 2026. But I think, I just wanted to touch on gold because from when we last discussed it to where we are now, there's been a massive move.
Yeah, definitely. Yeah, we had a bit of a delay in filming this particular one. It happened a bit later than we originally planned, but it's interesting because in that time between when we would have filmed and now, things have really moved. We've seen gold go up by about $200 an ounce. We've seen silver climb to almost $70 an ounce. We'll get back into that. And then platinum as well has made some major moves. Um, and yeah, it's interesting. We were saying throughout the year, wait for December. There's going to be this uptick during the holiday season in the bullion prices, and there we go. We're seeing that end of the year price kick in.
Yeah, I think it's quite interesting. I mean, I haven't seen a move like that with platinum. When at our last podcast, we looked at platinum around $1,642 an ounce. We now over 2,000, and it went straight past that to it's sitting at currently at 2,173 at there and thereabout. But it's showing a definite move. And again, I mean, we are going to discuss silver and platinum in this installment and the projections for 2026 and beyond. But just to touch on gold, we as we mentioned, gold's done since our last podcast is over $200 an ounce. We're looking at 4,480 odd dollars right now. Again, we did the projections for 2026 and beyond. And I think we are pretty much on target for over $6,000 in 2026. Again, I definitely want to review our last podcast, but I think we kind of spoke in the 5,000s, and I think that we to get through $500 of gold in the first quarter next year to maybe the first half still be pretty much based on the current trends, of course, would be on point.
Definitely. It's we started off the year at 3,500. We're now sitting at closer to 4,500. When we've seen all the major players update their projections throughout the year, and it's really difficult to say what exactly is going to happen next year because we can say, oh, it's going to reach 5,000, 5,500, and we might be in the same situation that we just constantly updating those projections. Silver and platinum, yeah, as you said, absolutely unprecedented growth. I mean, in 1 month, we've seen it absolutely skyrocket, especially platinum. It's gone from being a mover and a shaker to being an absolute rocket ship in the past month. Silver, phenomenal year. That's all I
Yeah.
can say on that.
Well, let's get into it. So, if we look at silver, started the year around $28 an ounce. Um, it's now currently, as you mentioned, just short of $70 an ounce. This is unprecedented. This is all-time highs we're talking. So every move it does now upward is a new high. What's interesting is, and now looking into the data, is silver is and I can talk from a lot of the business I'm involved with, especially on trading the commodity internationally. And we associated to a number of mints, as you know, in different countries. and the demand for silver has shot through. This trend, especially amongst mints and so on, was probably more America and then Europe. But even in South Africa, I know that we've had a massive run of silver, the demand for silver, to the extent I know that there was been a couple of the mints that we work with where they did over 10,000 ounces of silver. That's 3.1 tons of silver in the last quarter of this year.
Definitely, demand is absolutely through the roof, and I'll get to that in a second. But let's just have a quick look at how it's performed so far this year. And as you mentioned, we started off at $28.90 per ounce on the 1st of January. It's now sitting at least this morning when I looked and when I was preparing for this, it was sitting at $69.41.
Well, it's 69.55 when I last checked. So
So it's
it's already
already
gone up in just a morning.
definitely, and I mean, just going by what I looked at this morning, it was up $40.51 this year so far, this year to date, and I mean that is 140% increase. If we look at it in rand terms, it was 543 rands for an ounce of silver on the 1st of January. It's now sitting at 1,157 rands for an ounce.
So you've more than doubled your money.
It's 11% increase in terms of rands. Now that of course ties in with the rand, which I looked today and I got quite a shock because it was sitting at, let me grab that quickly.
16.69 was when I last
16,
checked. Yeah.
yeah, it's sitting at 1667 was the
Yeah.
price this morning when I had a look. And if you consider that's coming from 18 rands 84 in January,
Yeah.
that's 11.5% that the rand has strengthened this year. And once again, I think it is a little bit more to do with the US dollar weakening than the rand actually strengthening.
Yeah.
But still, considering that you still made more than 100%, or the price of silver is more than 100% up from the 1st of January, despite that
With the
strength.
strengthening rand. Yeah.
Exactly, yeah.
You know, and you mentioned, I mean, the price for silver for the rand dollar, well, as you mentioned, was around 18 rand 80. But I mean, it did in January go to 19. It actually went over. It touched on around 19 rand 11 to the dollar. So there was a lot of fluctuations there. But again, this speaks to what we talk about with precious metals. That yes, the rand is strengthening, but it's not due to anything that we as SA Inc. are doing. It's got more to do with a very weak dollar internationally. We've spoken about it where there's a definite move from within the BRICS bloc or BRICS nations, where there's a definite move to start to weaken the dollar considerably with foreign transactions and not utilizing the dollar as the international monetary hedge.
Yeah, well, look, I think we should give the rand a little bit of credit as well. You know, we got off the grey list. There seems to be more stability in the electricity supply. So I think, yes, maybe that has played a part as well, but I don't think to the extent that we're seeing it strengthen against the dollar. That's still largely driven by a weaker dollar.
Yeah, listen, credit where credit is due. You are right. We did have the grey listing, which is important. However, we still talk about the fundamentals, and I've said this before, is we are sitting under 1% in growth rate, and that is not sustainable. When you look at other countries on the continent that are growing at 3 to 6%, and we're not even cracking a 1% growth rate. So yes, I think there's certain factors or certain sectors that have reformed and hence the improvement of that grey listing. I do think the fact that the commodities have been strong has been a massive knock-on effect to the SA Inc. and what we receive from a revenue perspective. So those are all knock-on effects with a strong commodity price. But that does also not uncover the issues. And of course, we've heard Donald Trump's been knocking on the or jumping onto the bandwagon about Cyril Ramaphosa, as he calls him, and the issues that he will not let the ANC government do this and all the stuff that's with it. If you agree with it or you don't, you know, at the end of the day, we got to look at these things because it does create ripples and it does affect South Africa. And there's a definite drive within the US to kind of stifle us to a degree. And I think it's kind of because of a weak dollar that they got to try pull something back. And I think they definitely look at emerging economies as the opportunity where they can affect the strength of the dollar against those currencies.
And I think the fact that we still have the biggest economy in Africa is probably why we are directly in the firing line when it comes to that, you know.
Yeah, yeah, spot on.
But yeah, as I said, we going to look at a few of the factors of why the silver price is sitting where it's sitting now. Obviously, these don't all account for this dramatic move in the last 2 months, but if we look at it, you know, silver prices is up massively in the past 2 months, and it starts with a lack of availability with a constraint supply and demand, as with all things, it's the basis of any transaction. And we're looking at, it's on track for its fifth consecutive annual supply deficit this year.
Yeah, and you say that, and again, I'll talk to that supply from a refinery perspective, where I know the refineries that we work with, they are on back order with silver right now.
Well, worldwide, the cumulative shortfall from 2021 to 2025 is estimated to be almost 820 million ounces.
Yeah,
And along with that, we've got higher investor demand because of the price going up. But before we get to that, we just need to look at the actual demand for silver in terms of photovoltaic panels, in terms
absolutely.
of electronic
The green
devices,
economy.
green
Yeah,
economy. You know, the demand for silver is constantly rising. As I just said, we in for the fifth consecutive annual
deficit.
deficit
Yeah.
this year. And the two of them, you know, we see the price rising. Investors go, oh, look at that. The investor demand goes up, and that just continues to push the price up even further. And so that's basically it. The silver strength is driven by rising industrial demand, solar panels, electric vehicles, electronics, and we've got this constantly constrained supply.
Yeah, and again, just in the photovoltaic market or the solar panel market, that has consistently run at a 20% demand growth rate per annum. And again, the two biggest markets there is China and India, and they're the two biggest populations on the planet. So that speaks to that demand, that speaks to it. You mentioned electric vehicles, or you mentioned the green economy. We've seen it. We've seen that massive step up in your hybrid vehicles, in your electric vehicles in the market. I mean, it's becoming more and more a common thing. If you'd mentioned it, and even think about when we first started the business a good 5 years ago, we spoke of these things. But you know, I remember when we first spoke about electric vehicles and how realistic would it be in our city. And again, there was already charge points on major routes. And now you can go down to your local gym or to your local hospital or your local shopping center, and there are charge things. And what's interesting is before those used to be open parkings, and now they're busy.
Well, it's interesting that we're talking about the rise of electric vehicles, because what I'm going to say next is probably going to contradict that. Because
Oh,
if we look
really?
at platinum, right? So,
With hydrogen.
well, hydrogen's one part of it. I'll get back to that just now. But we've seen 140% increase year to date on platinum. January 1st, $543 an ounce.
Yes.
Now we're sitting at, I think I've got the wrong number here. No,
For platinum.
I'm sitting on the wrong thing. I'm looking at the silver still. Sorry about that.
Yeah,
So
so platinum, we started around 890 odd
it was
dollars an ounce. Yeah.
$896 an ounce. You're
Yes.
correct. Yeah, I was looking at the silver price, but today we're looking at 2,175. It was
It's
earlier.
insane.
It is absolutely crazy. That's $1,279 that it's gone up year to date, and that is, I mean, all-time high was $2,290 per ounce in March 2008. We're almost back there,
Yeah.
you know, and we're probably going to cross that again soon. Um, If we look in rand terms, 142.7% increase year to date. 1st of Jan, it was 16,891 rands an ounce. Today, we're looking at 36,221 rands an ounce.
It's insane. And again, you speak of platinum from an industrial perspective, industrial demand, and I've always been a big advocate of this. Is until they can find batteries that are firstly as far as their weight and their recharge times to be equal to what we currently do. In other words, fill up with fossil fuels, be it petrol or diesel or so on. And that's what has always held back electric vehicles. Hydrogen can come in two forms. You can fill it up and you can burn it through your vehicle, with water vapor being the emitting gas, or you can utilize platinum and hydrogen, where it converts the platinum, or the hydrogen, sorry, converts it into electricity, and platinum is a catalyst to do that conversion.
Yeah, hydrogen fuel cells,
Exactly.
and we're seeing them across the world already. They're being used in cars, they're being used in trains, in
I
ships, in
still, yeah, I still think it's gonna outweigh, especially now with platinum running like this. I do believe that hydrogen is going to be the next big thing, and especially now going into 2026. I think you can actually pretty much expect a massive uptake in hydrogen fuel cell technology and hydrogen applications.
Well, yeah, that is the one thing, is the rise of hydrogen, and we know that Japan is advocating strongly to become the world's first hydrogen
Economy.
economy.
Yeah.
Um, as I said, trains, ships, cars, everything, they're switching it over to hydrogen, and it does require platinum for the hydrogen fuel cells, for the electrolysis, for the process of converting hydrogen into electric power. But that is actually just one part of it, and that's why I said I'm going to contradict you in a second, because lately there's actually been an industry shift back towards hybrid and internal combustion engines, which gives a need for more catalysts, and platinum is a key component in
Absolutely.
those platinists, in those catalysts. And the reason for that is, as soon as battery powered vehicles became a viable alternative to an internal combustion engine vehicle and was no longer really a novelty or an oddity, prices started going up. you know yes, the first battery powered cars were complete novelty, so they could charge what they want for them, and your actors and
You Elon Musk's of this world created
well,
it,
your
made it look very hip and cool and like rock and roll.
exactly,
Really, yeah.
they would have their battery powered vehicle, which is going to save the environment, flown in on a private jet, which
Yeah, where completely, and even the manufacturer, I mean, where you talk about footprints, your carbon footprint and all this, is a lot of those, especially with batteries and that, the actual footprint, carbon footprint to get that battery manufactured outweighs its value, if that makes sense.
it definitely does. But so basically, what we were seeing is it went from a novelty to actually being an everyday sort of, not that strange to see battery powered vehicles on
As
the
we
road.
do, yeah.
And you know, but then the prices started going up. And if I look at it now, in South Africa, the cheapest electric vehicle in South Africa at the moment is the BYD Dolphin Surf, which goes for 340,000 rand. It has a range of 232 kilometers, and it's a small little hatchback. Now, paying 340,000 rands for a small hatchback, a lot of people are going to think twice. If you're looking for a small car, the cheapest internal combustion engine car is 178,000 rand. Now, many people, firstly, can't afford that jump in price, and secondly, aren't prepared to do it. And this is the cheapest. This is, okay, I'm not talking about small little cars which are not really, can't even really call them cars, but this is your cheapest sort of viable vehicle, battery powered vehicle. If you look at the next one, it's up to 400,000, and the next one up from that is almost sitting at 600,000 rand. So it's not viable for somebody who's looking at purchasing a small car as an everyday runaround to look at a battery powered car.
Yeah.
And because of that, they're going to go for the 178,000 Rand, which is the Suzuki, I can't remember which one,
Swift
Atto
or
or something like that.
yeah.
But they're rather going to go for that. So they'd rather buy the ICE engine instead of the battery powered cars. And then, as you mentioned, platinum is there's a growing demand for hydrogen fuel cells. And then, lastly, it's still a safe haven. It's still a hedge against inflation. It's a cheaper alternative to gold, and that's driving up investor demand once again. And all of these things combining is why we're seeing the price of platinum absolutely skyrocket at the moment.
And I do take your point. I think we have seen an uptake in electric vehicles without a doubt. You see them, whereas before they had all these stations, and very rare did you see a car being charged in them. Pretty much every place I've gone, I've seen one car or two cars being charged. That said, I've seen also a massive trend in hybrids. And again, you reducing carbon footprint, you improving your economy, and you're also getting better range.
But that hybrid still requires platinum.
Exactly.
It still has the internal combustion engine
And
component.
yes, and that's the point is so from your catalytic converters, and we've always said this is where, and I remember when we had a big discussion on platinum, and people thought, oh, well, as you said, your internal combustion engines would be eliminated. They will be at some point. But of course, what's happening now is you're getting more efficiencies. And we always spoke of that, that you would get efficiencies before there'd be complete closure of an internal combustion engine.
And I mean, we can actually see this. Europe had agreed that by 2035, no
Yep.
more internal combustion engine vehicles will be sold, and now we're seeing automakers fight against that heavily.
And their solution is a hybrid. So where they're saying, and it actually makes sense if you think about it, is that transitional move. And of course, your hybrids, the economy is great. You have the batteries, they are being recharged, so you don't need to be charging into a plug at your home or wherever you're going. So again, it does make sense. It makes a lot of sense that you're able to do that, and they're great to drive. I mean, I've driven a couple of them, and I was actually quite impressed.
Yeah, and I mean, I think there's still a lot of legs to go on hybrid vehicles if you look at it that way. You've got your vehicles that run on the internal combustion engine with a hybrid delivering extra power. You've got your plug-in hybrid electric vehicles which can run on either or, and
Yep.
then you've got your hybrid vehicles which are basically you've got your combustion engine running as a generator powering the motors. So yeah, I think internal combustion engines in some way, shape, or form is here to stay for a while. I don't think the 2035 cutoff is going to be met.
What's interesting is I think the one country that might get closest to it, which is probably the biggest emitter of most things, is China. And I mean that's the irony is they one of the few countries where they've been pushing their automotive industry to, and we spoke about this, I think it was in the last episode or the one before, where we've seen a massive advancement in technology within the automotive sector, and China right now is definitely the world leader in it.
No, the battery powered vehicles are absolutely insane. They are coming along in leaps and bounds. They've probably surpassed the likes of Tesla with
Yeah.
just pure technology and advancements in battery powered vehicles. And you can see that they are heavily driving towards that. They are heavily driving towards renewable energy sources, wind, solar, etc., etc. And it's quite mind blowing that China is the one who right now is leading that charge.
And the Americans are the ones that are pushing back against it. So it's
Yeah,
interesting.
beautiful clean coal, to
Yeah.
quote a certain somebody.
So, oh yes, it's amazing. It's perfect. It's spectacular. Yes, we know who we're talking about there. So, okay, now we got the nice crystal ball out, and Willem Theron's going to look into it, and he's going to gaze and say, for silver, let's start there. What do you think and see? I know we've done some research on it. We got market opinions, but what's quite crazy is the current surge in silver has already killed some of their predictions. With a couple of analysts were saying, yeah, $65 an ounce is where they see it going in 2026. And we haven't even got to 26, and we're already there. So where do you see it, Willem? Silver.
So the funny thing is, usually the way we do is we look at the predictions from your major institutions, and it's quite hilarious because it's already shot past those.
Well, that's what I just said, and this is the joke. Is we've just done a call up of it just to confirm what we already had discussed, and I mean let's go through them quickly.
So I mean, let's start with Bank of America, and their prediction was $56.25 an ounce.
An average, yeah, and a peak of 65.
Peak of $65
Okay,
an ounce.
we literally 50 cents short of 65, right? No, we've gone
way
past it.
past that.
We're 50 cents short of 70. Sorry, Bank of America, recalibrate, reassess. Okay, next one.
We've got Government Capital, which is an algorithmic one. It sees silver hitting 58 by the end of 2026, and even higher long-term potential, they say.
Okay, so next one, Saxo Bank, it's between 60 to 70. Guys, you're 50 cents short of that one. Next one, Citibank or Citigroup. They also between 60 and 70. Oh, sorry, between 60 and 72. I don't know why the 72 was relevant, but JP Morgan, interesting. These guys are also within the commodity space have been one of the biggest companies definitely within the commodity space. And here they're saying a peak of 58 and an average of 56. Deutsche Bank 55, UPS 55 to 65, HSBC. I mean, they way down 44.50.
Well, I mean, look, the thing is, and we said this ages ago when silver was heading towards $50. We said that, it's unprecedented territory. Nobody knows what's going to happen once silver hits the $50 mark. And for a while, it looked like, okay, it's hovering around $50 an ounce, and then it dipped below. And we thought, okay, that's sort of the new ceiling. Is just sitting around $50, $51, maybe 49, etc., etc. And then suddenly $60. Now we're heading towards 70. And as I said, there's a global deficit for the 5th year running. Demand is going up. We could possibly see silver easily hitting 75, perhaps even 80.
Okay, so this is interesting. I mean, BNP Paribas said $100 an ounce. Now, this goes to the mythical 3-digit forecast, which we have had spoken of at length through the years, where there's been some outlanders saying that silver would hit $100 an ounce. In fact, if you had said to me the beginning of this year, with it sitting around $28 an ounce, that by the end of this year it will be just short of $70 an ounce, I would have said that's a bit of a stretch, but realistically we're there.
I mean, I think when we spoke exactly of this earlier, I was pretty conservative on it. I think I said something like $35 or $36 an ounce is what we're looking at for 2025.
And we must definitely go back and check it, but I think I did say that we would surge past 40, and I think we'd hit a peak of about 45, but I saw it sitting in around the high 30s, 40 for most of the year. So we both got it wrong. Again, we did acknowledge the demand side, which has been spoken of, and I think with the surge in actual growth within those sectors, and also the deficit. Now, for years, we know that the London Bullion Market Association and then also the COMEX are the two big market exchanges that dictate the price of silver both from a futures perspective, where for instance JP Morgan will go to the COMEX and say they would like to buy X amount of silver and they'd like delivery on this date, and it's normally a 3 month in advancement hold, and that's a future hold, right? And a lot of those, there's even for the COMEX and the LBMA, there's been a massive run and a massive demand on the supply of silver. And this is where that deficit has come in and has really affected it. I mean, no, even in my side, from a retail perspective, I would never ever have believed, and we as a country have had quite a lot of supply. We get all silver, majority of the silver in internationally mined is byproduct of other mining processes, be it nickel, be it gold within South Africa, be it platinum within South Africa. There are, there are very few pure silver mining operations, and hence the actual deficits have been sitting there. Do yourself a favor, go and try see if you can get a silver Krugerrand, which is sadly manufactured in America, not in South Africa, where it should have been manufactured with Rand Refinery, who are the custodians and the entity that should be producing them locally. Yet they are completely sold out.
Well, this is the other thing that we spoke about, I think, last time out as well, is the demand for bullion is going beyond paper. Instead of buying paper derivatives, people are actually demanding to have that product, that physical product in their hand.
And this is why I mentioned the futures and the paper derivatives, because what's happening now is a lot of those companies are actually calling for the delivery of the physical, whereas they'd normally sell before taking on the delivery, and then of course that would then affect the price. And this is where, and again, I'm not big on conspiracies, but it has been interesting how the COMEX and the LBMA have been able to hold back the price in silver, where, as you mentioned, we've had 5 years of deficit versus supply on silver.
And this is the thing, we've always said there's going to come a breaking point at some stage. And if we look at the previous record high before, obviously now it rocketing to almost $70 an ounce. If we adjust for inflation, it's still way, way, way below that. And I think we're looking at something like almost $200 an ounce adjusted for inflation before we get there. I can't remember exactly what the figure was now. But this is the thing. We're sitting with a deficit for years. We're sitting with 800 million ounces of deficit over the since 2021. And the fact that silver is now reacting, we're seeing this massive spike in price. We saw a gold-silver ratio of over 100 earlier this year,
Yeah.
which is absolutely insane. Obviously, that's closed down significantly now, but still, it's not quite where it should be, especially if we consider how much silver is being demanded throughout the world, how much silver is lacking in the market, and the demand for the physical product instead of paper.
Yeah, and that's interesting. You mentioned the gold silver ratio. I mean, currently we're sitting at a ratio of, I think it's 64 to 1. So in other words, 64 ounces of gold of silver to 1 ounce of gold. And that's pulled down. I mean, if we remember, as you mentioned, was over $100, excuse me, not $100, but 100 ounces of silver to 1 ounce of gold. It's now retraced into the mid 80s, where it had been for a vast period of probably the first quarter of this year. And then since we passed June, July, silver then started to rocket up. And currently, as from what I can see, is sitting on a 64 to 1 ratio right now.
And it's actually fascinating to look on the charts of that. You see that number coming down. It's unprecedented, and I know that's a word that we used a lot this year, especially regarding to silver, but it is really something.
And what we need to also, when we talk gold silver ratio, is the ratio is still favoring silver to be undervalued in relation to gold. It's only when it gets between 30 to 40 is where silver then starts to become more expensive. and more expensive in relation to gold.
Definitely. And I mean, we've talked about that as well, about the, what's it, the 40-70 or 40-80 theory, where if it is above 80, you swap to gold, to silver.
Silver.
If it's below 40, you swap to gold. And it's been a while since you would have made a swap, to be honest. But, you know, the way silver's going right now, who knows? Maybe we'll see one next year.
Okay, so back to the initial question, Mr. Theron. You got your crystal ball. Where do you see the price of silver going in 2026?
I'll be honest, I'm scared to make predictions at this point.
Come
I
on.
think I think we're going to see a minimum of 75, holding steady above 75, and possibly going up to 85.
Okay. I tend to be more bullish. So my feeling is this, based on the current demands, and we've given the lay of the land, why silver is rocketing as it is I don't think that that's going to slow down. I think we're going to get to $85 within the first quarter. And then I think there might be that brief reprieve building up to June, where it will be a little bit lateral. It may even drop back down into the 70s or mid 70s, there and thereabout. But then I think when we build towards July, August next year, I see that ramping back up to 85. And I'm going to say this. I do believe, and I can't believe I'm saying this, is I do believe we will get to $100, where we break the $100, the mythical 100, three-figure, three-digit $100 an ounce.
That would indeed be something. I mean,
And again, I think finishing the year, I think it's a hard one. If you base on the current growth, where we've more than doubled the value, um, I do foresee that we could finish the year with an $80 to $90 silver. And I think in relation, I think gold will continue to grow. And we're going to discuss platinum now also, with its pricing and forecasts. But I think the commodities are not slowing down. Next question is, people will say, but have we hit the peak? Is this the wrong time to buy? I know for a fact we had a client, that we were looking at doing investment of silver and gold, and they kind of held back. And if they bought in October, both gold and silver, they would have already been up significantly. And that we're talking 3 months ago.
well, this is once again, you know, where we say, firstly, we're not financial advisors. We can't tell you legally what to do with your money. You know, we're just giving you information, and from there, you need to do your own diligence. You need to look at what's happening and make your own decisions. We're not telling you, yes, this is the time to buy right now. But
it is.
well, you know, when is the right time to buy?
Again, I think the important thing here, and I think why silver is also from a retail perspective, from the man in the street, is silver is still affordable. It's still, even at in rand terms, 1,100 rand an ounce, or $70 an ounce. It is still it still has a buying price point that the average man in the street can buy, and actually start to see value and growth. Gold has surpassed that. I mean, we're sitting at now there are very few people that can go out and buy an ounce of gold sitting at, in rand terms, over 75,000 rand, or in dollars over 4,000, what's it, $4,200 an ounce. No, $4,480 an ounce. And that for me speaks to it. But now, the next thing, back to that crystal ball, and now we're going to look at platinum.
Now, platinum is a little bit more of a harder one to get a grip on, because there are fewer, how can I put this, fewer of the institutional investors actually put a price out there. But what we do have is, let's take a look at the consensus medium forecast from Reuters. And this is a poll of 30 analysts and traders, and they took a median forecast on that, and $1,550 per ounce, which we have long surpassed.
by over $500, I might add.
Indeed, and this is the thing, we seeing metals focus, who's quoted here as being bullish at $1,670 an ounce. So, we're sitting in a situation, in a position right now where the forecasts are already
Outdated.
outdated, needs to be reviewed, and we haven't even started 2026 yet. You know, long forecast is the only one that's actually maybe still valid. They say there's a potential for $2,320 per ounce in December 2026, but I think we're going to surpass that long before then.
So what's interesting is, as you mentioned, and we looked at the 2026, and literally every single one of the companies that we looked at, and I'm talking about UPS, Reuters, HSBC, World Bank, JP Morgan, the whole lot of them had all undershot 2026's predictions before even 2026 began, which is insane to even think that. And then so I then looked at it, and I did a bit of a deeper dive, and I said, you know what? Let's broaden the projections from, instead of 2026, let's go to beyond to 2030. And what's interesting there is the general consensus then was a minimum of 1,915 to a total or a peak of around 3,853 by 2030. What's interesting in that, and the big factor that's playing into platinum's price, is the growth in hydrogen. And we're talking about where a lot of the World Bank said that there'd be a 35% of total demand of hydrogen will grow with by 2040, and that will speak to the growth within platinum alone.
And the other thing that's making all of this extremely difficult at the moment is the dollar's volatility right now. We it doesn't seem all that long ago that we were talking about the strength of the dollar. Now we're talking about the weakness of the dollar. Is this going to continue? With the current administration in America, things aren't going to change. And let's face the facts. The dollar has lost strength since this administration came in, and I don't see that making a 180 reversing and gaining a massive amount of strength over the next few years. So, we're looking at the next 4 years, the dollar is going to be under pressure. So, where's that dollar going to go? How much of an impact is that going to have on the price as well? I mean, if we're looking at platinum, remember one thing is that the world's majority of platinum is mined right here in South Africa, and we have our own challenges, which is constraining supplies, which is pushing up the price even further. They need to dig deeper for it. Processing costs are up. Electricity, we were praising it earlier, it's better, but it's still under massive strain.
Yeah, and again, I think what you're highlighting is a very important thing across the board with all the commodities, is we're living in a very uncertain world right now. We look at the top economies within the world. A lot of them are under mega pressure. Employment rates are down. As far as their growth rates are down, and this is across the board. You look at, and we've spoken at large with America, that there is definitely a market bubble that's formed, and it's been forming for more than 5 years. And at some point, that has to give. At some point, there has to be some form of a correction from a market perspective. And all that will do with commodities, especially specifically gold, silver, and platinum, is those prices will shoot up further, and they will go more parabolic. So gold at $8,000 an ounce would be there. It would be obtainable. Platinum, where it's sitting at now, I mean, I don't think you get a couple of outlandish forecasters saying over 2,000 by the end of this year, and we're a couple of weeks out from that. Again, and I think that speaks to the world we're living in right now, and it's very volatile. It's very uncertain. I mean, Donald Trump and the US are causing, now with Nigeria, if they don't do this, they're coming in. We've seen the issues globally. with regards to Israel and Palestine. I mean, there was just that incident in Australia with the Muslim shootings on and Hanukkah and so on, that the world is still not settled. And it's, to me, it's that old analogy that we're sitting in a tinderbox and the sparks are going and something's going to take. And it's scary, but again, we need to address this because it does have an effect on the commodity prices.
It does. I mean, as we said, your commodities, your gold, silver, platinum is your safe haven investments. And from the increase in price, that is also driven by investor demand, which means your investors are already moving towards these commodities.
Yeah. And again, I think where we're seeing the prices now is a direct, almost it's a direct look upon where we are. You know, it's that imprint of what we are in right now, is that there's that uncertainty. We look at world banks, we look at central banks, we look at all of those institutions that are hoarding gold. Now they're hoarding silver. Now they're hoarding platinum because they see it. I mean, from an industrial perspective, there are a lot of big mega companies that, and I know this for a fact, that have direct contracts with all the platinum mines in this country. And for as a smaller supplier, you can't even get supply of platinum in smaller volumes anymore, where we could.
Yeah, it's becoming very interesting in the markets. We're gonna have to wait and see on some of these things because I mean, as we said, most of the predictions from major financial institutions are out the window already.
Okay, so 2026 platinum, your thoughts?
I think at least 2,500. I don't see it going much higher than that. Yes, we spoke about the increase in demand for catalytic converters, for hydrogen fuel cells. I don't think next year we're going to see a massive boom in hydrogen fuel cell use. I think it's going to be a bit more of a slow burn. It's going to take a few years, 5 years, 6 years, etc., which is probably why we have to look at the long range forecasts instead of next year's forecast to actually get a picture of where this might be heading.
Yeah, again, my thoughts is based on the current growth, current trajectory of where platinum has been and to where it is now. I do think that $3,000 is now very realistic. If you consider at one stage that platinum was double the value of gold, more than double the value of gold. So it knows and understands that it can be more expensive than gold, which tells me it can go parabolic and surpass gold in growth in a very short period of time. I mean, the growth that we've seen in platinum this year alone speaks of that. That that there's not been another commodity barring silver that has performed like that.
Definitely. Well, look, the one thing we need to remember about platinum is if we go back to when it was at its peak, it was so expensive, as you said, twice the price of gold. It was
80, yeah.
$2,280 an ounce. And at that stage, that was a ludicrous amount of money for an ounce of silver, platinum. And that's when palladium kicked in and started taking over. And everything was retooled to use palladium instead of silver because palladium was the much cheaper option at that stage. Then palladium took off, silver became cheaper. We saw that big fall. Now, however, we don't have that massive palladium price anymore. Palladium is actually cheaper than silver at the moment. We do have a bit more of a constrained supply of palladium because it comes from Russia.
Exactly.
And despite or aside from the obvious problems with anything coming from Russia at the moment, is an actual physical problem of permafrost melting.
Yeah.
And yet the price of palladium is sitting at $1,800 and something an ounce at the moment. So platinum has already surpassed that. So I don't see that major shift happening that did when it was the other way around, when platinum was high and palladium overtook it. I don't see that happening.
No, and I'll give a couple of reasons for that. Is, and we've discussed it in this podcast already, is the growth in hydrogen. Platinum, from its metal characteristics, nothing comes close to how it reacts with the conversion of hydrogen into gas and so on, or the harvesting of hydrogen. Platinum is still the preferred metal based on what it delivers and how it actually produces. Palladium, as you mentioned, big problems there is because it is the biggest supplier of palladium within the PGMs is Russia. And of course, we know the global context to that. And then, as you mentioned, permafrost. So for me, do we see that reverse where they start to move? I do see palladium will come along, and it's done well. I mean, when we last spoke about palladium a good couple of weeks ago, it was sitting at $1,433 an ounce. It's sitting at $1,773 an ounce. So it's still also going up, and the demand there is also speaking to that. What I do foresee here is, because now where it was just AutoCATs where the battleground for platinum and palladium was, and of course that switch caused that complete collapse, is platinum is diversified in its demand. And it's not just AutoCATs, it's hydrogen harvesting, it's fuel cells, it's a whole lot of other things that now is drawing platinum, and also investment. Those are the things that is starting to strengthen that demand and that need for platinum.
Definitely, there are a couple of things that are strengthening the demand. What I was mostly getting, or what I was mostly trying to say is, you had very high priced platinum and low priced palladium, which prompted that switch for platinum to fall very far and palladium to go up significantly.
Yeah.
We don't have palladium up there at the moment to drag platinum up, and that was the point I was trying to make.
Yeah, no, fair, and I think it's a good comment. Again, it's been quite a whirlwind. I think we may try get another installment of the podcast for 2025, but we'll see how we go. Of course, we're in the constraints of holidays and travel and so on. But yeah, Willem, any closing thoughts?
I think we are in for an interesting 2026. As we've seen, some of the predictions from major institutions are already blown past. So it's going to be very interesting to see where silver goes, where gold goes, where platinum goes in the next year.
Awesome. Willem, anything else as in closing?
Just wanted to say, if you enjoyed the episode, leave a like, and if you want to see more, be sure to subscribe, and we'll see you guys in the next one.
Awesome. Take care and have a blessed and safe festive season. Bye bye.